This is a point and figure price chart of the S&P 500. In this picture, it is of the SPY, SPY ETF. And again, it represents the S&P cash or the S&P 500, the 500 biggest stocks in the world. Let me just clear that off. Back on January 19th, I think it was, if you go to our YouTube channel, you will see a video called Brace for Impact. We were talking about the yield curve, and we also pointed out this chart. At that time, we were up here, and we were warning, and we clearly stated that if we broke right here, 580 double bottom break, that we would break down, and in all likelihood, and in a very quick manner, we would approach this blue line, roughly 478. We came to 483. Not bad, right? And now we've bounced, and we're forming this formation. Now, as a trader, this is one of my favorite point and figure formations because it is frustration. The bulls are lining up. The bears are lining up. And I can tell you that for everyone who's in here, either existing trader, investor, whether they're new or been there for months or years, they're watching. They may not be watching this chart, but they're watching the S&P 500. And if they are short, and we break above 544, they're going to do what? They're going to cover those shorts, and we're going to shoot up. If they are long, hoping for a market rally and a return to the highs, if we don't get that breakout, and right now it doesn't look as though we will because we are in O's, we're descending. If we break this area right here, 508, we're going to rapidly, probably in one day, shoot down to 483 and most likely break this trend. And if we break this trend, folks, we're going to be all the way back down in time. I'm not saying it's going to happen in one day, down to about 400. And then it's going to be Katie by the door. And Katie's a really big gal, and she's going to have a hard time getting out that door because she's going to have a lot of company. There may be people who have been in the S&P for years, but there are plenty of people, plenty of institutions, and plenty of leveraged money that were in up here. The QQQs, you ask, they're in even worse shape. Let me show you. These are the QQQs. We said the same thing when we were up here back in January, and we said if we break this, it'll be a triple bottom break at 508, which it was, that we would run down rather quickly to 429, and we did just that. And we pierced it, and we broke. Once we did that, that put in that upper trend. That delineates that the NASDAQ, the QQQs, after months, after years of trending up and trending up handsomely, the trend has changed. We're now trending down. Over here, when you're trending up, buying the dips is fine. Over here, when you're trending down, you do not want to buy the dips. If you do, you're going to give back all the money that you made. In fact, what you want to be doing is selling the rips, which is exactly what we got going on now. We bounced up off, a lot of indecision, forming yet another little bearish triangle in our view. Now, if it breaks up here, sure, there might be some short covering to take us up back in here. But near term, it looks like they're giving up the ghost and we're pulling back. If we break this area here, we are going to rapidly shoot down to 404. And if we break that, it's going to be, once again, Katie by the door. And Katie is probably going to get to about 344. If you did not take action in January, you did not take action in January. If you don't take action now, hope is not a strategy. The fact that the markets came down 20% does not mean that it's obligated to go back up to the high and restore that money that you've lost. And you have most certainly lost that money. Take it to the bank and try to tell the bank, well, my account used to be, and I want a loan against that amount. They won't do it. Your accounts, like mine, are what they call mark to market. And if you were long up here in a big way and you were invested in the QQQs, you've seen close to a 20% decline. If we break here, it's entirely possible that you could see another fast 20 plus or more decline. It's possible. I am Bagadon at StockMarketCaddy.com. I am not suggesting or recommending anyone do anything with their money. I'm not. I'm not soliciting your money to manage. I'm not. Not making any specific recommendations to buy or sell a thing. I'm not. I am trying to reach those persons who have a passion for the markets, who want to demystify the price action and learn to take control over this part of their life. Take it back from Wall Street, from Madison Avenue, and God knows, the Contrarian News Bubble channel. Be sure to visit Stock Market Caddy, ADDIE. I am Bagger Don, and you're welcome to call me at 813-758-8263. We have an unlimited number of spots for monthly members. Monthly members get to see our algos every night. They can watch it once or twice, 2 or 3 times a week, so as not to miss an opportunity. Maybe to know when to average in and when to begin averaging out. If you want to become more active, you want to be trading the money flow, to extract cash flow, to start trading as a business, then we're happy to mentor you. We have a mentorship program. It's called the Q School. It's 3+ weeks. If at the end of that Q School you choose to become an annual member, and it'll be your choice, we're going to supply you some 65 to 70 proprietary trading tools. And we're also going to teach you during Q School how this chart is constructed, how to trade it, how to map out the price action. Point and figure takes out all the noise. At the end of the day, it's just the price action. I wish everyone the best. Feel free to give us a call. I can be reached again 9 a.m. to 9 p.m. any day at 813-758-8263. Good luck, everybody, and have a wonderful Easter.